Hello everyone and welcome back to Crypto's News. It is me, Omar Bam, aka Crypto, here your source for daily crypto content so you can stay informed with what is happening in crypto today to make the best decisions for yourself. So go ahead and sit back, grab yourself a nice beverage or a snack, whatever you want to do. I hope you can relax while we go ahead and dive through today's crypto journey. I thank you for coming back to the show and for continuing to support it as long as we're still able to here on YouTube. But it's looking pretty good. Welcome everyone joining live. Hey Dream Catchers, Curb Shifter, 10 pence, reminding everyone to hit the like. Yeah, please hit the like. It helps the show on your way in if you're joining us live, or even if you're watching afterwards. It's a really nice thing. So let's go ahead and just start so we don't waste too much time here. We have a really nice day when it comes to the prices. As you can see, it's been a continuation of the good times, it seems. It looks like fears about a recession just are not impacting crypto to a great degree anymore. It's like we've already priced in the fact that the Fed will be raising rates to 100 basis points, unless it surprises us with something like a 200 basis point rate hike. That it looks like crypto just wants to continue the party. Did it ever really end the party? I guess debatable. We had a very interesting kind of scenario where we had almost like a double top, really, when instead of just one massive peak like in prior bull runs. So it just has shaked out a little bit differently. We'll look at that later on with a Grayscale report. They looked at an investment report looking at crypto, so we're going to take a look at that and some of the other news, as I mentioned. But yeah, I mean, looking at the prices, ETH gas prices are still rather low, so we're not seeing a massive amount of usage for the smart contract platform, but still it's up 27.5% over the last days. Anticipation of the merge, woo, the great merge coming around September 19th, mid-September at some point. Expected to reduce the amount of issuance on the Ethereum blockchain by a huge amount, and that finally drawing a lot of eyes and attention toward Ethereum, which is now performing ratio-wise quite well relative to Bitcoin there, which is also not slowing down. It's broken $21,000. It's up 3.3% over the last 24 hours. It's given back some, while Ethereum looks like it just wants to break clean of $1,500. So not bad. And you have some that are trying to chase here, and trying to buy in, trying to figure things out. For the most part, I think people have been very bearish recently, so that was a sign that it could be ripe for taking the opposite side of that trade. Other coins that are doing really well, we have here at the 27th spot. Well, actually, it's 26th spot now, it looks like. we have here Ethereum Classic. So this is one of the classic trades, one of the first trades that I had looked at when I was first following Ethereum, and we found out that Ethereum was going to be going to a proof of stake model rather than proof of work. In other words, it'll be over 99% reduction in the amount of energy that it uses. It'll validate the ledger by using staked Ether tokens that could be subject to a loss if someone cheats and tries to put up fake transactions, for example, or fake blocks, as opposed to using ASICs right now, these specialized chips or graphics powered processors. They use a lot of energy to figure out puzzles like you see with Bitcoin proof of work before there's some sort of issuance. But the move to Ethereum eventually going to proof of stake has been seen as a potential driver of Ethereum Classic, which will be staying with the old proof of work model, the current proof of work model that Ethereum has for the most part, although we're kind of like in an in-between hybrid model right now. Although the Ethereum 2.0 tokens that are on proof of stake model are not withdrawable for a while, maybe 6 to 12 months after the merge happens in September, then those will be withdrawable, but for now they're not. Anyway, so Ethereum Classic is pumping on this speculation that miners are going to be flocking to Ethereum Classic from Ethereum when the merge happens, and they'll be bringing all this hash rate and all security to Ethereum Classic, and it'll bring a new resurgence to ETC and bring it back to where it needs to be. I think that's pretty much for the most part what's driving this. Some are saying it's propaganda by the Ethereum Classic community, and I don't know which kind of fundamental impact it ultimately will have. I'm hearing, for example, that really ASICs will be the only thing that'll be able to be profitable in Ethereum Classic, so it's really not going to benefit many of the GPU miners anyway, and they're going to have to find other algos, other coins to mine. But regardless, it's up 49%. It's one of the stronger performers on the week. Oh, what's up, Soda? Nice to see you. And another coin that's up a lot recently is Polygon. So Polygon is up 59.9% over the last week, up 19.7% over the last day, which is pretty huge, breaking over resistance levels that it had previously been at, and going up to 0.8837. MATIC is a side chain network that's built over Ethereum. It doesn't inherit all of security of Ethereum, but it hopes to, I think, at some point. It's one of the more centralized side chains, but it's seeing a huge amount of adoption. And in the last 5 days, we found out that Disney, in their accelerator program, which when they first came out, I think they gave out like $120,000 in grants to projects. Now they don't give them a grant really with any sort of project that is announced as a participant of this and has been approved. They get guidance from Disney's senior leadership team, as well as a dedicated executive mentor. Anyway, this Disney Accelerator program is going to feature Polygon. As you can see here, they wrote out in their blog post, Polygon is a scalable blockchain network that allows developers and enterprises to build Web3 experiences. So the future of the internet, that which we're building with crypto, really a backbone of Web3, is something that Disney is trying to get really behind. As you can see, they're also partnering, or they're going to have as part of the accelerator program FlickPlay here, which is involved with NFTs. They also have Lockerverse, a Web3 platform that empowers creators and brands to tell culture-defining stories and deliver unique access and experiences. But yeah, for nearly a century, Disney has been at the forefront of leveraging technology to build the entertainment experiences of the future, said Bonnie Rosen, general manager of the Disney Accelerator program. And Disney Accelerator is thrilled to be part of the legacy with their newest class of companies. Look forward to furthering their commitment to innovation and continuing to bring magical experiences to Disney audiences and guests for the next 100 years. So that is going to be, they're going to be unveiling something in the fall at Burbank, California. So pretty close to me, actually, up here at the Walt Disney Studios lot at Demo Day. So to me, it's pretty huge that they're going to be looking at Polygon here, which is a platform for Web3 to build all sorts of applications. So maybe, to me, it seems like definitely Disney is drawn to NFTs, and they're going to want to build, if not only NFTs, other things on top of Polygon, and taking advantage of this faster, lower fee network that ultimately pays Ethereum some sort of tribute, which is pretty huge. And we found out from Mihailo Bielvik of Polygon that some other new announcement could be coming up soon, which might be seeing why which might be why we're seeing this pump. When we started 0x Polygon, the Ethereum community embraced us, said Mihailo. That empowered us to onboard 30,000 app. That's massive by now. And 150 million users and become a giant among scaling efforts and alt L1s. How many of those 150 million users are actually active? That's quite a percentage of the world's population. I don't know about that. But anyway, we made a promise to stay committed, says Mihailo, and give back to Ethereum. In 3 days, we're delivering on that. So speculation that they're going to be launching the new version of Polygon that features zero-knowledge proofs at ETHCC, so the Ethereum Community Conference that's taking place in Paris in about I think it starts tomorrow and it goes over 3 days. So that could be something that's coming up very soon. But I don't see how much that gives back to Ethereum unless you're going to be creating some brand new technology, issuing it out there, or what else it could be. But let me know your speculations, especially if you're involved in Polygon and following that even closer. Another thing that I think is interesting is here posted by Eric Wall. So he said, update, ETH has left the fire sale territory. So as we know, Ethereum has been pumping quite a lot over the last week. And it might be that some people waiting for a lower price could be waiting for a long time. Looking at the Ethereum rainbow price chart, we have now left the fire sale, gotta get it while it's super hot territory, and we've entered the undervalued territory here according to this log scale chart. In this last prior cycle, we only hit as high as, but have we earned it? This third part of it here, this third color part, which is like orange, a nice orange color here, maybe peach. But have we earned it? Yeah, I don't know if we had earned it. There was a lot of interest in NFTs, but did they earn it? There was a lot of interest in DeFi. Did those earn it? Maybe not completely all of the FI that we've created since we've seen that centralized finance, which went down, which we'll cover in just a little bit more in the show. Those were some of the things that were the Achilles heel of this entire market coming down. So I don't know. We didn't hit huge, massive levels like we hit back in 2017 when we left this price chart, this log chart altogether. So I think that's interesting. Rollbacks are rollbacks. Doesn't matter if it's POS or POW. Yeah, I guess that's another thing to talk about. That's in relation to Ethereum Classic or Ethereum. Yeah, that was a big thing that drove people to stay with Ethereum Classic and not necessarily move to Ethereum, is a belief that after the DAO incident, Ethereum rolled back the chain. Although it was done in a technically sophisticated and semantically arguable way to say that it wasn't a rollback, I think it left a sour taste in a lot of people's faces in a lot of people's minds when you saw that the Ethereum Foundation website said that the chain was immutable, and it turns out if there's a hack, it might be mutable. Debate as to whether that should be a possibility because it's still in beta. I don't know. I guess that's for you to decide. But I think that was a lot of people who stayed in Ethereum Classic and continue to root for it. But I don't think that's necessarily why we're seeing the pump right now. Yeah, thank you for that further insight, Curb Shifter, that you gave us there. Thank you, George. Welcome. It's been more than 3 years since you last came here live. That's amazing to have you live. It's something special for sure when we're sharing this moment, even if there's a little bit of latency together. I think every moment in the universe brings something. It brings new ideas. It brings new hope, new optimism, new energy. Every moment is different, really, if we're being present. So thanks for sharing this one with me, George. Yo, what's up, Validator? ETH joining. Yeah. And OG Foundation, ETC plus BCH. Yeah, the underdogs. They get shat on a lot by the big boys, you could say, really by the maxis. I think the more level-headed people don't really care. You do you. But yeah, for sure. Nice to see them have their days now and then. So I think this was interesting. So talking about Ethereum Classic and how, proof of stake could be something really much better for the environment that Ethereum has been focused on. This might not be so great for ETC past this trade, I would say. And it could be something that's pretty good for Ethereum relative to other proof of work coins, namely the big boy at the #1 spot, Bitcoin. Really, I think it's what this post by Lightfoot is talking about. He said, it's freaking hot. Half of Europe is on fire. Hottest day ever recorded in the UK today. Surely you've seen some of this climate awareness that's going on. And we're not even into August yet. Globally, the warmest 7 years since records began have all been since 2015. So the last 7 years, just year after year of warming and warming. Climate change is forcing its way back onto the front pages in spite of an era-defining war and possible global financial collapse. Climate change is going to be increasingly terrible PR for Bitcoin. People are going to be furious about this issue when people die in wildfires, crops fail, properties burn, and public services struggle to cope. To completely and entirely remove its exposure to that angle of criticism is crucial for Ethereum. To not have a plan like Bitcoin would and will be disastrous. Most people seem to be focusing on the massive economic sides of the merge, which is completely fair enough. You know, money number gonna go up probably, or it should go up, assuming the market continues upwards. But some are saying it's Ethereum in general is the reason the whole market is going up. It's not Bitcoin at all. And you could argue the same thing in 2017. It was ICOs and these initial coin offerings for startups to be able to raise capital in a brand new fundamental way. That being led by Ethereum that really drew all this interest and market cap into crypto overall, including Bitcoin. Maybe that's why that market happened to climb so much. Although I definitely think the halving plays quite a role. And this time with NFTs and DeFi, why everything was going up. So, I mean, it would make sense to me that people think about the economic sides, of course, but there's more angles here. So anyway, most people seem to be focusing on the massive economic sides of the merge, which is completely fair enough, but be sure to not sleep on how huge the energy waste side of it is now, and increasingly so over the next few years and decades. Yes, when the pitchforks come out against if this does happen, when people start getting really upset, the heat is too much to bear, and they start looking at culprits as to what is generating heat. They start picking on blockchain like they do time and time. It might be politically nice to start picking on blockchain. At least they won't be able to pick on Ethereum, which will be going away, doing away with a lot of that energy wastage. And I think that could apply to other proof of stake coins as well that could be benefiting here. Anyway, I really hope it doesn't impact Bitcoin, because still Bitcoin is at the top here. Although that could change. Where was it? We were going to look at something here that was going to show us that. But yeah, actually, let's go ahead and just look at it right here. We'll go to Ratio Gang. You guys know the Ratio Gang website. It compares Bitcoin to Ethereum. So it looks like we were 43.20% of the way toward the flippening. Where is this expectation, hope, possibility, impossibility, depends on how you're looking at it, where Ethereum's market cap surpasses the market cap of Bitcoin 43.22% of the way there. Some would say that we would never get this far. And there's actually a memorial to the fallen maxis down here on the website, where a Reddit troll said on January 2nd, 2021, "Flippening, the markets have proven you smug meth heads wrong." Meth, M-Eth, ETH, Ethereum heads. Meth heads wrong year over year. BTC is king. ETH will never be a store of value. There's 20% more of it now since 2017, and the utility is dog shit. Pay $20 to send your money or gamble on shitcoin. Anyway, if the ratio is not that far off actually, and to go from the current price that we're at, if we were to flip because of the merge, because of hate on the climate destroying coins, assuming everything stays the same price wise with Bitcoin where it's at right now, which is unlikely, let's face it. But if it does, then we would have Ethereum at 0.2 of Bitcoin, and it would be at $4,330 when we got the flippening, which I think would drive Ethereum's price even higher. I don't know that would be somewhere where you would want to settle and sell on the news. Although some are saying that's what the merge is. Yeah, pick up Ethereum now, take advantage of the prices, and then sell when the merge happens. But fundamentally, I think the merge will be driving the price higher and higher over time. Although that very well could be a sell the event kind of news. I'm not going to say it's not. And this could be a bull trap. Some are saying what we're seeing with the prices going up should remind us to look at the definition of bull trap and be careful to not fall for it. And if you must fall for it, if you are buying back in, dollar cost averaging tends to be a smarter way. Not betting it all on one single day, but maybe buying on the red days, buying on the green days over a certain period of time. So what is a bull trap? A bull trap fools some traders into thinking a market or an individual stock price is done falling and that it's a good time to buy. But then it turns out it's not a good time because the price soon resumes its descent, catching buyers in a money-losing trap. In many ways, it's the opposite of a bear trap, which can fool traders into selling out too soon in the midst of a bull market. So I'm seeing all sorts of posts like this that are coming out. So we're finding a healthy balance, I think, of discussion as to whether it's time to buy back in, whether we're in a bull market and it's time, or especially from the Ethereum crowd. I think whatever you want to say, tend to be quite optimistic really about things. But you have the bears still out there fighting a good fight. So take your pick and trade carefully if you must. if you're not just a long-term hodler here. We got some clues about how long the bear market might be, according to Grayscale that I had mentioned in the beginning of the video. So they put out a bear market report, their Grayscale Insights. So Grayscale is the same company behind Genesis Trading. They're behind CoinDesk, the big news site in crypto, and they have this section here that I thought was of note, figure 4 on cycles. So they take a look at the prior cycles, the 2012 to 2015 cycle, and it was a period of 1290 days, so 1,290 days, pretty much. And then we moved up 1,177 days to regain all-time high. It was the same in the last cycle, according to this, where you had 1,177 days to regain all-time high, and you had 1,257 days of bear market. So very similar to the cycle before that. Currently, we are 1,191 days into this bear market. So I think they're saying we could still see a few more days really before we end this bear market and resume to the upside. We are at a max drawdown now of 72% across market caps, down, which is still not as low as we saw in the last bear market where the max drawdown was 84%. Although it is very similar in this drawdown to the cycle in 2012 to 2015 where we were down 73%. Again, this cycle we've already hit 72% down. So what they put in the blurb at the bottom was, in contrast to the previous two cycles, the 2020 cycle, this cycle appears to have had a longer run in the all-time high range with two prolonged peaks, as you can see here, in contrast to the sharp rise and fall in prior cycle. This may have been due to the growing maturity of the crypto market that did not exist in previous cycles. Not only has crypto become easier to invest for retail investors, that happens every cycle, the proliferation of crypto exchange traded products such as Bitcoin and Ethereum ETFs in Brazil, Canada, and Europe has brought in institutional investors that may have been. That is true. We have not seen it be so easy for institutional investors in the past. I mean, you really have to have, we had to have those institutional investors first come on board and be the pioneers and be the ones saying we're willing to look bad by getting into Bitcoin before you saw others pile on. That was a big narrative back in 2018, was the onboarding of these institutions. And now there's just a part of this, although a lot of them may have sold, right, to balance out the risk. If we are expecting a recession, again, markets tend to be forward-looking. They're not present-looking. They try to price things in immediately based on what is the publicly available knowledge. That's why it's so tricky to try to get ahead of everyone else. These funds and firms have some of the best access to research, for example, and they have history now in knowing how to bet ahead of everyone else, and they've been involved in crypto. So they might have sold early, in fact, and maybe that will benefit the rest of us. But anyway, it has been easier for them to get on board than previously in this asset class. Further, decentralized applications, dApps, have been gaining momentum and finding market fit across decentralized finance, gaming, art, and more. So that could be why things look a little bit different with this cycle. Or maybe I'm just going to go and put this out there. Maybe we are still in the same cycle and it's that extended cycle theory that you're hearing from others. We just haven't seen it play out long enough where there will be these are just tiny little parts of what is going to be a massive explosion to come. And I think that would be a possibility if the Fed is forced to reverse course and just make it easier here. If we do see that a recession is it's worse than what would have been expected. Although I'm hearing a lot of people in crypto now talking about how we've hit peak inflation and that's going to look good, and that means that the Fed will have to stop tapering, could maybe stop tapering as hard, and but it could pick up again. I don't know about that, where that could be. But I think if it was a scenario where the Fed had their hands tied behind their back and they did have to start stimulating again, that could be the kind of scenario that sees trillions and trillions pouring into cryptocurrency as people know that if risk assets go up, stocks go up, that cryptos are the best performing asset class relative to everything else, including real estate, looking at the returns that we've seen in the past. So why not pile in, especially if they've already had exposure to these markets? Maybe these firms have trading desks already for crypto, and they're just waiting on the sidelines for confirmation that it's game time again. So you wouldn't want to be out of the markets in that kind of scenario, of course. Anyway, this is some of the big talk that's coming out. There was these documents, over 1,000 pages that have been coming out in reference to Three Arrows Capital, which is at the center of all of this huge liquidation that has caused crypto to just boom, 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 down and down. So here, according to Blockworks, they wrote Three Arrows Capital owes 27 crypto companies $3.5 billion. So no small sum, according to court documents. We're also hearing that crypto lender Genesis is one of the big ones. Apparently, Genesis, again, headed up by Digital Currency Group. They're the same ones that made this report. They own Grayscale again and CoinDesk. Genesis. So crypto lender Genesis was one of the ones that lent to Three Arrows Capital to the tune of $2.36 billion. So a huge stake they had in that. And it's amazing, frankly, that they're not going insolvent to all of this. From what I'm understanding or hearing, DCG might have assets to the tune of $20 billion. So $2.5 billion is about $2.5 billion is a huge hit, but it's not enough to make them insolvent, damn it. No, Grayscale is a powerful force here when it comes to crypto. One of the, if not the richest crypto company here. I mean, they do the Grayscale Investment Trust. We know that they held about 3% of all the Bitcoin in existence, although they've definitely taken a hit on that, maybe if that's what they lent to Three Arrows Capital. But I thought this post that just came out before I went live by Jack Newold here, he went and dove into the 1,100 and whatever page legal document, so we don't have to. And here it is. So he says Three Arrows Capital was one of the big, and this is interesting. We get even to the talk about some yachts that were purchased, mega yachts, using some of the capital that Three Arrows Capital had. So Three Arrows Capital is one of the biggest crypto hedge funds, at one point managing over $10 billion in capital, until the founders dropped off the map. A 1,000-page legal document came out today, bringing clarity to the case. I went through it. This is what I found. To get you up to speed, after making a series of large directional trades, GBTC, Luna, STF, and borrowing from 20-plus large institutions, Three Arrows Capital went bust. Then the founders ran, and the loan defaults have led to mass contagion in crypto. As founders Suzu and Kyle Davies are nowhere to be seen, legal proceedings move forwards. Today, a court document was leaked, one which asks the Singapore government, where 3AC is based, to recognize liquidation proceedings and cooperate with liquidators. Well, I don't have much legal background to speculate on the case, says Jack. There are a lot of interesting tidbits to be gathered from the legal document. However, 1. Creditors. Three Arrows Capital owes, again, over $3 billion. Biggest creditor is Genesis, with $2.3 billion loaned. Default on debts contributed to the insolvency of Celsius and Voyager Digital. Speaking of them, actually, I meant to pull this up for you guys. There was a first court hearing for Celsius today before we go back to this. And we saw here that there were some next steps. So if you're one of the Celsius creditors who might be due some, we got some clues as to what could be happening here for the money there. So just real quickly, next steps: preserving value while negotiating a comprehensive restructuring transaction with stakeholders. So that's not new news. Using Bitcoin minted by mining operations. We know that Celsius took some of the depositor money, which they were allowed to do according to their terms and conditions, whatever the heck they felt like, to start a mining company, or mining arm of Celsius. So using Bitcoin minted by mining operations to help fund mining operations and grow Bitcoin holdings. Then consider asset sales and third-party investment opportunities. And lastly, I think this is what's most interesting and relevant to you as a Celsius creditor: file and confirm a Chapter 11 plan that will, 1, provide customers with the option at the customer's election to recover either cash at a discount or remain long crypto, or 2, maximize returns for stakeholders. I think that's a piece of it. And 3, reorganize the Celsius business. So they don't want to give up on Celsius. But there might be a haircut here unless you're willing to hold on long enough and trust that Celsius will be able to stick it out. So just a bit of an update there. So yeah, defaults on these debts, to go back to the post by Jack with about Three Arrows Capital. Defaults on the debts contributed to the insolvency of Celsius and Voyager Digital. 2, the timeline. Although the rumors were floating around about big blow-ups since the Luna collapse, it seems like most creditors thought it was business as usual until early June. May 11th, 12th, immediately post-Luna collapse, several lenders ask about Luna exposure, and Three Arrows Capital says there's nothing to worry about. May 18th, Davies tries to prevent loans from getting called. June 3rd, interest rates raised on loans due to market conditions. Three Arrows Capital team pitches investors on new opportunity on June 7th to save the company. June 10th, 3 days later, crypto options broker Deribit margin calls Three Arrows Capital's Moby DCK, their account. June 13th, Davies tries to arrange a new loan from Genesis to pay margin call. June 16, 17, 3AC insolvency is widely reported. By the way, I'm hearing that Gemini today raised their interest rates for Bitcoin, for Ethereum, about 1% each, and for Gemini US dollar. Not saying that this is looking bad here for Gemini. In fact, we've heard from Genesis, who primarily operates a trading for the Gemini Earn program, where you're able to earn yield for still depositing some US dollars in the form of Gemini stablecoin, or again, Bitcoin Ether there. We're hearing that they're completely fine, that they were able to help themselves by calling on an 80% collateralized loans with Genesis. So it looks like Genesis might be fine through all of this. Again, they have a huge war chest of capital. So, but it's something, again, we saw with Celsius, where they were trying to tempt users by making things look good before they went under. So I always try to present those kinds of things so you can make your own decision, since we're hearing that there are emails going out that Gemini is raising their interest rates. Maybe they're just trying to take advantage of the fact that they're one of the last left here, able to offer an interest. Just saying. Anyway, so 3, reasonably sized yachts, houses, and crimes. So between September 20th and June 22nd, Zoo bought 2 Singapore good class bungalows and a yacht that has yet to be delivered. It's likely that borrowed money was used to fund it. The yacht was shown to lenders as proof of 3AC's credit worthiness. There's something here about yachts when you're about to go under that. Next time, I think, when we reach the top of a bull market, if people are buying too many yachts, companies are buying yachts, it should be a sign that they might be insolvent very soon. Kind of a waste of money. It looks like there was some really suspicious movement of ETH and stable coins just before 3AC was widely known as insolvent. At one point, they made a down payment for the yacht while ignoring an outstanding loan payment. Other potential crimes: lying about extensive losses to lenders, lying about leverage and directional market exposure, movement of funds, not disclosing their liquidation to shareholders and creditors. It's just not looking good. Some reporting, business structure, some reporting has recently been done around TPS/Tai Ping Shan Ltd, which is a legal entity related to L3LC and 3AC, owned by Su Zhu and Kyle Davies, partner Kylie Chen. It was recently transferred $31 million in stablecoins by a 3AC account. Okay, so something playing out there. As for Su Zhu and Kyle Davies, well, his wife, they're actually creditors in the suit against 3AC, claiming that 3AC owes them money. Okay. So the very same company that they're working for owes them money. That's not part of these documents, but it's wild enough to include. Recently, during online proceedings for liquidation, both Kyle and Zhu were on a call with cameras off and muted. We've talked about that here. Is the contagion over? Section 5, as we reach the end of this. Hard to say, but it looks like most of Three Arrows Capital's on-chain assets have been liquidated, pointing at these wallets and their NFT wallet. It's hard to imagine that Genesis, a subsidiary of DCG that we just talked about, Digital Currency Group, that owns Grayscale and other companies below, is happy to eat a $2.3 billion loss, but so far they appear to be solvent. They also own Foundry here, which we didn't mention. What's left? Equity and token agreements in 3AC's illiquid investments, some of which have surely been sold off. JPEGs, including Crypto Dickbutt. We covered some of that on the show here. Crypto Dickbutt number 1462. Good luck trying to sell that one. It looks like it's worth 1,400 bucks. They're not going to be recouping much of the $3 billion from that, but yeah. I don't know what to say here. I don't know how this can be salvaged. It looks like the story here is really over for Three Arrows Capital. Though it does continue. It looks like Gemini has been laying off. Love from the US, Samuel. Appreciate having you here. Looks like we have a bot here in the chat. Our first bot in the chat. Hide user on this channel. Goodbye. We might need some mods here soon. So if you want to volunteer, let me know. If you've been around for a while. Crypto exchange Gemini executes. It's coming out rumored now, and looking at some source according to TechCrunch here, that Gemini is continuing an aggressive round of layoffs. And some of that took place, it looks like today, according to leaks from the company. So, just 7 weeks after crypto exchange Gemini, ran by the Winklevoss twins here, again, we were just talking about them in regards to Gemini Earn program. They had to cut approximately 10% of their workplace due to turbulent market conditions, and it looks like a second round of layoffs is coming out that has not been widely communicated. According to a leak internally, and the source close to the company, it says that there was a reduction of another 7% or 68 members, according to the Slack, the company-wide Slack channel Monday morning. Gemini did not respond to this. So the company was laying off staff due to extreme cost cutting. So we've seen this with other companies like Coinbase taking place, where they have to become lean and a little bit more mean in order to survive the bear market, the crypto winter, as it's called. So there had been apparently before last week a document that leaked on an anonymous professional network called Blind, but it was taken down afterward, this document. But the document highlighted a plan that would take the company to about 800 employees, which was around 15% fewer employees than the 950 employees that they had at the time. So a response by Cameron Winklevoss, one of the co-founders, one of those twins, he had written in a Slack message that it's come to my attention that at least one team member thinks it's a good idea to post a snippet of our technology operating plan on a third-party website, Blind. Wow. Super lame. If you are leaking company information, you are exhibiting a low level of consciousness and respect for your fellow team members who greatly benefit from the openness we are trying to create and foster here. So yeah, I mean, it makes sense that they're laying off more staff. I'm not surprised, since Gemini has now been around the block, so to speak, for some time. And it's just what you got to do. It's dangerous to try to grow during a bear market, since you don't know how long you'll be able to fund things. And it's downright irresponsible, I think, to try to grow, but it does suck. So condolences to those who might be losing jobs, of course, since these layoffs are wide scale across the industry now. So there's been a huge fine in the Netherlands for Binance, who had been operating. This was posted by their Netherlands central bank. The Dutch central bank has imposed a fine of 3.325 million euro to Binance, or about $3.3 million, since the euro has fallen below the US dollar. But on Binance Holdings, because Binance offered crypto services in the Netherlands without a legally required registration with DNB. So apparently the fine has been moderated by 5%. It was going to be worse, but this is because Binance has now submitted a registration application and has been relatively transparent about its business operations throughout the process recently. But in a certain period between May 21st, 2020 and December 1st, 2021, it looks like Binance enjoyed servicing a lot of clientele over in, that's how basically it's worded here, in the Netherlands. They have a huge daily trading volume of $13.7 billion, and the government wants to get theirs in the Netherlands because Binance has a very large number of customers in the Netherlands. And it's enjoyed a competitive advantage because it has not been levied any fines by the Dutch central bank. I think it's interesting here that the Dutch central bank is basically operating as like the CFTC over, or the SEC almost, or even the government, the direct government over in the Netherlands. But anyway, yeah, it's law that they have to register there. I just wanted to present that for you. It's not going to really affect, I don't think, Binance very much. Binance has said they have the biggest war chest, according to the founder CZ, in all of crypto. Although I'm pretty sure it's Grayscale who has the biggest. Then you probably have up there companies like Binance and other major exchanges like Coinbase at the top with the biggest war chests. Anyway, I thought for homework, I thought this was of note. This was a director over at at BlackRock. I'm sorry. So we know them, that they're buying mortgage-backed securities on behalf of the central bank here in the United States. So this was a former BlackRock manager. He was on Leah Halpern's YouTube channel, and he talked about, for example, gold. And I'll show you a little snippet of that right now. He talked about cryptos, saying that really Bitcoin should be a part of everyone's portfolio going forward here. He doesn't seem to be a big fan of gold. I'll show you here.
But crypto's here to stay. Bitcoin's here to stay. It's going to be definitely a part of everyone's portfolio. When people talk about gold, I'm not a gold bug.
No.
Um, you know, what do you do with bars of gold? What are you going to shave off a little sliver? I mean, at least with Bitcoin, you can exchange it digitally.
Oh
Gold,
yeah.
gold is a much tougher sale for me. I'm not against
Interesting.
gold, and having some gold is not a bad idea. But if you know, if you're storing all your wealth in gold bars in your basement, and the SHIT stuff hits the fan,
I've
I
been
don't know.
trying to tell I've been trying to tell that to Peter Schiff. I told him, when the medicine man.
Peter Schiff. Poor Peter Schiff. Yeah, gold has not been performing well. I held some gold, some silver, and man, I need to sell it personally, just for my own living to survive and to have food on the table out here. It's rough in crypto right now, as you can imagine, having lost so much on Celsius. And man, is it just so cumbersome to have to deal with that. You have to find someone willing to buy, for example, bullion locally. You have to set up some sort of deal, lock in a price. You have to go show up with this heavy, cumbersome stuff. It's just not as easy as going on a crypto exchange and putting in a few decimal places and hitting a button. It's just not the same at all. So, frankly, I held gold and silver as a hedge to crypto and just to be well diversified. But I, in a way, wish I had held. Maybe not. I mean, at least I have my possession of these, and they're not held at Celsius. So holding actual physical possession of these things is a good thing. I mean, I don't have a centralized provider holding my gold and silver. Others do choose to do that in the form of ETFs or other kinds of contracts, but it's not how I've chosen to operate in that sense. I did mess up, learn my lesson, but yeah, I'm just not very happy with the friction that you have with gold and silver relative to crypto. So I totally get it. Anyway, he seems to be doing more research. Doesn't seem like he knows that much, but he's gotten behind crypto. So I'm gonna check out the rest of his interview. I kind of just went through it, but it looks like a good one. He gets into the repo. He talks about the central banks. Doesn't look like a big fan. And as someone who's kind of an insider at one of the biggest investment firms ever, I'm keen to hear what else he has to say outside of just crypto. So I'll be checking that out, and I invite you to do the same. The Great Reset Explained with Edward Dowd. I like to share with you other things I'm watching sometimes on the show. And we'll finish with a quote of the day here, which I found to be quite truthful myself. So it is, "Be truthful. Nature only sides with the truth," by Adolf Loos. And that's what happens here when you find out who's been swimming naked. Ultimately, nature will reveal the truth. And I think you want to be on the side of good, truth, transparency, and doing right by as many other people as others. I know that's how I try to operate. And I appreciate you guys showing up here and supporting that kind of work by just watching the show and sharing it. So we'll finish up there. I hope that you took away something from the show and that it informed your view of crypto today. We'll be back tomorrow, hopefully, giving you more information as we try to make sure that you stay on top of what's happening here in the best way. Take care, everyone. Much love and stay cryptic. Peace.